So we got an exciting episode because we're going to be talking about how to consolidate high utilization credit card debt through a personal loan. I'll say that again because that's pretty far out there. How to consolidate high utilization credit card debt through a personal loan. Fantastic strategy. And how to use a business line of credit to pay down personal credit cards. We're going to get into both of those strategies, but first, we're going to watch a video that I got from TikTok that's talking about these strategies. And then we're going to have Thomari's story pretty much give us his thoughts on what this creator is saying and give us a little bit more value because he does this for a living. So let's get started.
If you transfer your credit card debt onto a personal loan, your utilization will drop because loans do not get calculated into your credit usage. So, for example, I have an 830 score, but 1% credit utilization out of my 54 cards.
Yes.
But on my debt side, I have almost $1 million in debt, and that's an accumulation of mortgage loan and auto loan.
Yes.
Right? So that loan debt does not get calculated into your utilization. So if you get a personal loan, transfer all your credit card debt to a personal loan. That'll drop your credit usage and boost your score. The next step that you could do is apply for business credit cards, business loans, business lines of credit. Transfer that personal loan debt onto the business side. Now you've successfully
You've wiped it off the personal. Now everything's living on the business side.
Exactly.
Okay, now this creator said a lot, and let's digest the first thing, right? And how he was talking about how to consolidate high utilization credit cards through a personal loan. Can you talk more on that?
Absolutely. So what he's talking about, and we see it a lot with our clients, is I'll get a client where they've got tons of credit cards, or like let's just call it 3 or 4 credit cards, but their credit cards are pretty much maxed out. And when I say maxed out, they're either when we say maxed out, we're talking in the 90 to 100% range. Okay. That's what we consider maxed out. And when you're at utilization, let's just use $1,000 credit card, you're at $950.
Okay.
So that's your balance, and $1,000 your limit. You see how there's not a lot of room. So you've used more. Pretty much used all that you've been, almost all of it.
Yeah.
But not all of it, right? So when that happens, your score goes down. A lot of people are like, why does my score keep going up and down, up and down? It's because of utilization. And so when you get a handle on that utilization, you're in a better position credit-wise, especially since everything's based off of the algorithms of even having a score, your payment history, your utilization. Well, a lot of people don't tell you revolving credit is 30% of your score. And that utilization, where we're talking about right now, is directly impacting on that 30% and either making your score go up or go down. So that being said, when we talk about utilization, we want to be conscious of revolving credit. That's why he said credit cards, and then he talked about mortgages and auto. Those are installment accounts. Mm-hmm. So those have nothing to do with utilization at all. Those are installment accounts, and that's 10% of your credit. So we have 30% over here, we have 10% over here. And so the fact that he had $1 million in auto and his house, he's saying, well, let's just take that same person. Let's just call it $300,000 house, and let's just call it, that same $1,000 that they're maxed out on at $950, and they have a $300,000 house, and let's just say have a $20,000 car payment. So on the installment side, they have that, but they're hurting right now on the revolving side. So with the strategy that he's saying is, hey, get a personal loan, pay that $950 down to, let's just call it $1, and that'll give us that same 1% right there. And then now that's credit score, once it reports with the bureaus, is going to shoot up. So that's the strategy that he's talking about.
Okay. So when you kept saying revolving credit, and that is simply a credit card as a good example, right?
Correct.
And any type of loan, like personal mortgage loan, that's an installment line of credit.
It's just installment loan.
Installment loan.
Yeah, so it could be a line of credit, but most of installment loans are going to be your auto loans, your mortgage loans, uh, student loans are installment, right?
Okay.
So installment just meaning you have a payment. Let's just call it $300 car payment that you're going to make every month until you're eventually going to pay it off, right?
Okay.
Revolving credit, ideally, you're not going to want to ever pay it off. You're going to always want to keep it open, but it's always revolving. So there's going to be an open date, a close date, right? And so the open and understanding the open and close date, that has everything to do with revolving. And then just making that payment of that, that one payment a month until it gets paid off, that's installment debt, right? And so knowing how both of them work separately, we're not going to use the same rules for each other. So we're not going to worry about what did I buy this car for and what do I owe now, right? In terms of your credit, as much as we would, where's my credit card at this month, because I'm trying to buy a house next month and I want to make sure that I'm able to optimize my credit. And I got to really know what my revolving credit looks like, because if not, my credit's just going to go up and down, and I'm not going to know why. Or it's
Okay.
just going to stay down, right?
Let me pause. Let me
Or it's
pause you
going to
for a
stay
second.
up, and you're just kind of confused of what do I do.
Because you said two things there. There's two numbers that stuck out to me: 30% and 10%. Right? You said for credit utilization, the way it's calculated to your score is 30%. Is that correct? So that's a
Correct.
big. That's a big
Yeah,
part
so
of that.
30,
30. That's a big part of that.
yeah, that's a lot of people don't understand that, Omar.
Yeah.
30% of your score, I'm going to want to know more. Tell me more, right? So 30% of your score is a huge deal.
Yeah.
And then and I'm going to throw something else at you, because we're talking about installment debt. So
Yeah.
if you have revolving, which is 30%, and then you have installment, which is 10%, so 40% of your score is having at least one installment account that's open and at least one revolving account that's open.
Yeah.
And then having two different types of accounts shows diversity to that credit report. So you get another 10% for that. So that's 50% of that 30%. So 30% is a big piece of possibly 50. You see how, so revolving credit is huge. And that utilization is very important to understand as a consumer, because knowing those rules of engagement is always going to help you optimize your credit score.
Okay. So let me ask you this, because I saw this in the comments. If I'm a person that has credit card debt almost fully maxed out, how could I even apply for a personal loan with the good terms to even get the loan itself so I can do the strategy and pay off my high credit card debt? How does that work?
That's a great question, Omar. So ultimately, what you're going to want to do is, if you're going to want to try to pay your credit cards down. But let's just say you can't, because whether you ask, maybe a family member or somebody, let's just say you can't do that. You have to go to a lending institution. So getting a personal loan is a strategy that the gentleman was saying on this interview. So really what we're going to do is we're going to get a personal loan and take that personal loan, because typically when people have credit card debt, they use
The big
they have
banks?
15, yeah, different banks, different lenders, different interest rates. And as we know, credit card interest rates can get up to the 20% and over 15%, and so just imagine if you have, 15% on one card, 20% on another, and 12% on another, versus a personal loan is going to be one interest rate versus, let's just call it three or 53, depending on how many credit cards you have.
Yeah.
And so what the strategy would be is to get a personal loan. Now, if your utilization is high, a lot of times getting a personal loan is going to be very difficult, because your score is going to be low, but you're going to be trying to get approved for a loan. And some lenders don't like that, and they'll deny you because of that. And so the strategy that sometimes that not only that I've used personally, that my clients use, is the piggybacking strategy, where they're essentially going to a family member or somebody that they know, or there's actually a big business. If you research the internet, there's a huge it's called a strategy called piggybacking. Is you're adding an authorized user to your credit file, which essentially is going to, and if done correctly, because I'm not saying this works for everybody, because ultimately you have to know what you're doing in this strategy. But ultimately, what we're talking about is we want to lower your balance to limit ratio by adding an authorized user credit card to the credit file. And then once that happens, once you lower your utilization, your score goes up, then you apply for the personal loan, right? Now, by doing that and if done correctly, you went from not being able to get approved to being approved simply by using that strategy to leverage your utilization
Oh,
or your
okay.
leverage your debt.
So something else just clicked when you said that. Okay, so let me repeat some of these things here. So one strategy, if you have someone in your circle that you trust and that has good credit, and ideally like has a high credit limit, right? So let's just say, for example, 20,000, right? And they add you as an authorized user, then that takes your utilization way down because now that $1,000 that you're almost maxed out in just went from 1,000 to a $21,000 kind of credit limit to mess with, right? So your credit score would go up because your credit utilization went down, and then after some time, I don't know what it is, then you can apply for that personal loan and get good terms. That's the strategy here.
Exactly. That's called piggybacking. You
That's
explained it perfectly. That's a strategy that people have been using for years and years. Like some people, like in their with their family. When I say people, I'm just generationally. There's some families that have just always done that for their kids when they turn 18. They add them to their credit card when they go off to college, just so they have some type of credit to start off with. In this situation, we're talking about a strategy with high credit card debt, right? But ultimately, everybody, if they see this as a strategy, they can see how it can work for them. But those are two different ways to, like, in one situation, you just don't have any credit. So that's where piggybacking comes into play. Or if you have high utilization, piggybacking come into play because we want to lower that utilization so your credit score goes up. Then you apply. Because if not, you're going to be applying and getting denied if your score is not high enough, and so your inquiries go up. So those cost you 2 to 4 points every time you're like trying to apply for a different lender. So that makes your credit score go down as well. So if you're not playing your cards right, just you trying to get a personal loan or you just having your utilization high, but you're still trying to accomplish something like buying a house, refinancing your car, uh, you know, consolidating your credit card debt. Well, you kind of have handcuffs if you don't have the right strategies, like a piggybacking strategy that you can help yourself on. You're kind of like handcuffed in your situation versus being able to be freed up with some different scenarios that apply to you that you can ultimately leverage so you can get that car, that house, get that loan, that student loan, whatever it may be that what your goal is.
So I feel that this is definitely an amazing strategy, but a big part of being successful at it is the execution of it because there's a lot of ways that you can make mistakes and go wrong about it if you're trying to do it yourself. So I say all that because hiring the professionals such as yourself and your company, that's what you guys do and can execute it flawlessly
Exactly.
because
It's
you've done it
always
many times. Yeah.
exactly. It's just like going to the court of law. I do not want to represent myself. I'm always going to hire an attorney. It's the same thing with credit. We're not attorneys, but we're credit consultants. I've been in the business for almost 15 years now, and so like being able to help others through my experience is really helped me. Just as a person, just knowing that I'm helping others get to their first house or their first car, or, whatever it may be. When they come to Credit Pulse for help, we have the people like yourself. If they're buying a house, hey, go to Omar. He's in your area, or he's not in your area, but he's a veteran, or he's a veteran and in your area, or just the knowledge that you have. Like you're going to be able to help them, right? So it's just like the circle that we've created with credit repair and working with realtors like yourself, loan officers. It just really allows us to give clients that ability to see their credit score go up, because it's going to take work from them too, because most clients, they have some homework that they have to do on their end, but the knowledge that we have as far as like when it comes to the piggybacking strategies, when it comes to the credit repair, disputing, Fair Credit Reporting Act, Fair Debt Collection Practices Act, all that stuff. It does. Knowing that, having that knowledge of those laws that are consumer laws definitely helps us, and helps the client when you don't, if you're not versed in that. Like it's like, don't represent yourself if you don't have to.
Yeah. And I've been, researching and studying credit repair for this series that we're doing. And one common thread that I've seen is that the biggest thing people are looking for in a credit repair company is trust and honesty, right? Because you said this before, because you're in the industry, that there's not, perception wise, from the general public isn't good, because there's a lot of credit card service companies that are predatory, right? And a big part, I believe, in building trust and being honest is doing what we're doing now, showing up on video, talking about these topics, so you, the audience, can see how we are. And if we continually show up, I mean, we're dedicated. And don't quote me on this, but this is probably our 13th or 14th episode. So that's pretty good, I think.
Man,
Yeah.
I was actually telling my buddy earlier. I was talking to him, and I did mention I didn't know either. It's like 13th or 14th,
Yeah.
episode, and man, it feels good. Talking about things that are helping others, and talking about industry stuff that's going on. Looking at these videos, the way you've integrated, this content that's being put out there. I think that's great, because then we can kind of talk about it and see if this is clickbait, or is there some truth to this. Just me being in the industry as long as I have, I'm on social media all the time, and I see a lot of clickbait stuff that gets people to click, or they give you a little bit of info just to kind of get you wondering more, but they won't give you the whole. And I'm not saying that you have to get all the information when I'm looking, but I also what I am saying is, like, the more information that I can get, like on these podcasts, the information that we're giving out to others, and they can take that and run with it from day one versus having to make a phone call and things like that. I feel like that, to me, will empower others. And then if they are interested in making that phone call or that email, then when they contact us, it's almost like they have a sense of who we are already before even meeting us. So when we talk to them, it's just like a plug and play situation.
Yeah. So you just made me think of something really good. So if you guys are watching, you made this far, I'm on TikTok. You could find me by typing in Omar Pineda, Austin Realtor. And if you come across a credit repair video on TikTok that seems very clickbaity, or just you want to see if, like, hey, is this true or false? Send it to me, tag me in it in the comments. That way I'll bring it up with Thomari, and we can feature that in our next episode, because that's what we want here. We want to build a community, we want to get you involved, and we want to bring the education to the masses, because there is strategies for all this. And I know, because I'm paying attention, that credit card debt, especially the last couple of years, has skyrocketed because of inflation, because the cost of living, because the medium wages, right? There's so many reasons why credit card debt, and to survive. So I think credit card repair is going to be more important now and in the foreseeable future. But understand that there is a way out, and there are honest and good people out there that are wanting to help you, and not charge you a fair price for their fair services, right? And that's what we're doing. That's what we're doing here, and we're gonna continue to do that. So,
yes, we are.
All right. So last part of this series, of this video, we're gonna look at some of the comments, because some of the gold is in the comments. And let me scroll back up here so we can start with the first one that I really want to speak on. The problem is, so Rebecca Sophia Scott says, the problem is that when your credit cards are maxed, nobody gives you a personal loan. So we kind of touched on that, right? With the piggybacking thing?
Yeah, absolutely. We touched on the piggybacking. We touched on the fact that, your credit card, if they're maxed out. See, I want to add a little nugget here too, because, like, let's just say, just because your credit cards are maxed out, it could be a situation where, knowing the utilization, I call it a utilization game. If you learn how to play that, meaning, no, and I touched on it earlier in the segment, when you know the ending date versus the due date, paying your cards down before the ending date will allow it to report with the bureaus within a matter of 10 days, right? So your credit cards could be maxed out, but you have the money, but you're not on the schedule of knowing when the ending date of each card is, because it's going to be a different ending date on each card. So you might be able to just, pay it down before the ending date. So now they're not maxed out. Because sometimes when I sit down with clients and they say, I look at their credit cards and they're all maxed out, and they're like, well, I max them out on purpose. I max them out and I pay them to zero. And I'm thinking, well, if you're wanting to optimize your credit, those are the two places you don't want to be. You don't want to be maxed out, and you don't want your total revolving to be at zero, because both situations your credit scores goes down. And if you're trying to purchase something, you don't want a low credit score versus your optimized credit score. And if you have an optimized credit score, that could be a difference between getting denied and getting approved, right? So that being said, when she mentions the problem when your cards are maxed out, you're right. We could either pay him down based off of the utilization game and the credit card, or we can use piggybacking as a strategy, because let's just say a different situation where they're all maxed out, but I don't have the money to pay them all down to where I can get a loan, a personal loan. That's where that piggybacking strategy comes into place.
Gotcha.
Where now, strategy wise, now I'm going to add more history, maybe, and then limit to that credit card, more limit than anything, because that's going to push my score, my utilization down, which is going to push my score up. Then apply for that personal loan. So those are strategies that we're talking about.
Gotcha. Okay, let's do a few more. Let's see. Herberto Sanchez says, how do I transfer my credit card debt into a personal loan? I felt like we spoke on that.
So that's a great question as well. So ultimately, when you're transferring debt, in this situation, the strategy would be more of like getting approved for personal loans. So it's not necessarily transferring the debt, because we're transferring debt from a revolving credit, because there's two types of credit, like we talked about, like revolving credit and installment debt, right? And so ultimately what we're going to do is get approved for a personal loan, which is installment debt. And then we're going to use that money to pay the credit cards down, right? And so that's how you're essentially transferring it, if you want to use that term. You're taking it from, because the money that you're getting lent, you're taking and you're paying off your revolving credit. And now there's a different trade line that's going to report that doesn't have a utilization issue like you would have if it's your revolving credit's maxed out. And now you have a installment account and a revolving account, and you always want to keep your revolving credit open if you can help it. I'm not saying you can't close it, but the more revolving credits open on your credit, the more value is on that credit report. So if you have 20 cards, yeah, you can close some of those. You don't need 20 credit cards.
Yeah, I've heard that too. When it comes to credit cards, you never want to close it out, even if it's paid off, because the more you have, the more that lenders are willing to trust you with that limit, and that's a good thing, and that's why you want to have open revolving lines of credit.
100%.
Yeah.
The history, the more history you can have on a credit card, you'll just start seeing the more value on your credit report. So you're 100% correct.
Yeah. Okay. These are tricks to the trade, people. Okay, let's do one more. And then if we have time, I kind of want to talk on the business line of credit. Okay, so let's do one more here.
Sure.
Let's see. We have a Simi that says, sounds like you're telling people to put themselves in debt for a better credit score. What do you think about that?
So that's interesting, because like I feel like she could be saying that to people. I mean, like, so let's just be honest. Everybody's different when it comes to these strategies, and these strategies aren't going to work for everybody. But ultimately, with this video, what the gentleman was really trying to break down is we're taking credit card debt and we're bringing it and we're leveraging that debt. So there's a difference between good debt and bad debt, right? So we're using a strategy to increase the score, so you're paying less in interest rate. So that's the strategy. So in this situation, let's just say for me, if I needed to do that, I would say that that's a good debt play because, like, if I have to do that to put myself in a better position versus a worse position, a worse position would be if I'm doing that and it's not getting me. It's not like I'm paying more. Let's just say in debt, or I'm paying more to the banks, and I'm putting less money in my family's mouth. So to me, you have to really kind of evaluate what these strategies are for you, and that's why, like Omar, like we were talking about earlier, be careful of trying to just do it without doing your due diligence, without doing your research, without consulting with an expert or professional that's been in the industry, because then you could just hear something that's clickbait, or you could hear something that, oh, it sounds kind of good, or it sounds too good to be true, and then you try it and it doesn't work out for you. So on our comment, I think it's all relative to the listener and who's really implementing these things in their life, because there's not one way that's going to help everybody. And on the other side, somebody can take one thing from this and then maybe talk to an expert that leads to whatever goals that they have being accomplished.
And there are a ton of creators in this space for credit repair. And I know when I'm looking, to educate myself and I'm looking on social media, I'm always trying to see if I could find someone that's local to me. So I know we're both here in the Austin area, but you service all, like any state in the US, right?
Yeah, so yeah, we can service any state in the U.S., but we're primarily in Florida,
In Florida.
Texas, California. That's where most of our clients come from. But we've
Gotcha.
helped people all over. So
Okay. Okay. So I know if you want to get started with Thomari, because you want to have just someone a second opinion to go over your situation, and I have all the stuff in the description, and there's a link that will take you to answer some things. I seen that a big kind of resistance for people is like they don't want to enter their personal information, especially like their social security number, on anything right off the bat, because again, trust and honesty is a big part of all this. How do you like your website, the link that you send people to? Like, how secure is that? How can you give people a little bit more confidence in that?
right, that's a great question. So ultimately, when it comes to credit repair or any type of like we use Identity IQ, Smart Credit, Experian, TransUnion, Equifax. When it comes to any of those. When it comes to the internet and when it comes to protecting people's security, we're held to a higher standard because we do get people send their social security information to us and things of that nature, and not only to us but the third parties that I just mentioned as well. And so they're very highly secured when it comes to being able to access and put information in on the internet. So we take that very serious, and we definitely follow the rules when it comes to compliance, when it comes to that as well.
Gotcha. Gotcha. So you do have protocols in place and probably like an encrypted kind of cloud based something to store all this stuff. And I mean, at the end of the day, I just saw this the other week. It was AT&T, one of the big telecommunication companies, that just got a huge data breach. A hacker got hundreds of thousands of personal information accounts. And I mean, that's a pretty common thing. It doesn't get a lot of news traction, but there's big Fortune 100, 500 companies that get hacked all the time, right? And I say that because I think for the small to medium businesses, maybe it's not such of a target, and or well, first of all, and second of all, maybe it's because you have all this good encryption, good policies in place, so you protect people's information. I guess this is what I'm getting at.
Yeah, absolutely. Equifax, I think, got breached so many times so far. The three at least that I know of. But like, some of these big companies, they get breached. Where especially the big companies like the credit bureaus. Because they're privately owned companies. At the end of the day, but the security side of what goes that we have to have. And making sure that like the encryptions, like you talked about. I work with a lot of mortgage lenders, right? So anytime like anything sent out, it's got to be encrypted, kind of like the same thing, because there are different they have to be held to a different standard because we're dealing with people's personal information. And so that's a good thing, because a lot of our clients have gone through identity theft, so they've got their identity stolen before, to where like now they need our help. So it's like, it's one of those things where, it's, you always want to be mindful of it, and do everything that you can, and then having a solution. Like, if you have been a victim of identity theft, or if you don't want to be a victim of identity theft, it's taking the right steps, like putting a fraud alert on your credit report, possibly. That for me, that's what I do with my credit, so people can't just. It makes it harder for people to like steal my identity. So like little things that you can learn, and just be careful for and mindful for. We work with the monitoring services, and through the monitoring services, they have like cybersecurity type situations where we offer, for anybody that ever signs up with our service, they sign up through a third party, like I said, Identity IQ, which comes with $1 million of insurance that protects them from identity theft. So if that ever happens, like if they ever do that, or they ever go through that, their monthly payment that they pay us, so we can stay on the same page on the disputes, that actually is insurance policy that they're paying every month too, to protect their identity. So when they go through bad, credit situations, now once we restore their credit, we don't want this to ever happen again. So we're always, helping our clients, or thinking ahead of how we can bring value so identity theft does not happen.
And I'll just simply summarize that. You stay proactive, not reactive, when it comes to these things. That was
Exactly.
That was a big thing I heard in the military. I heard that in the private sector too, and I always love that. And that's how I operate too, because I've been on both ends of the way you do business, when you're working with someone in leadership that's proactive, and how that feels, and when someone's reactive, and it's you want to choose the players that stay proactive.
Yeah, exactly.
Okay, so we're going to wrap things up here. We went over in this episode how to consolidate high utilization credit card debt through a personal loan. We talked about the piggyback strategy. We didn't really get a chance to talk about the business line of credit to pay down your personal credit cards, but maybe we'll save that for the next episode, because I think that's worthy of another 30 minutes, because I don't want to go over that too much. And again, folks, this is Thomari's story. He's the founder and owner of Credit Pulse. I'm going to have a way to contact him in the description. You could either call him, reach out directly, or I would suggest going to that link. I think it's kind of better to get in his process flow, to follow the link, get your information. That way, when you guys do talk, you have a more meaningful conversation, because he has something in front of him, instead of just calling him outright and saying, "Hi, I need help."
Thank you so much, Omar. I really appreciate that. And again, I appreciate the opportunity to be on your platform. I feel like I'm learning from you every time I'm on this, because at the end of the day, each one teach one mentality here. And the way you do business, I really appreciate it. And I appreciate the opportunity for you to give me to help your client base, your fan base. I know you're all over the internet. I see you everywhere, man. So I really appreciate the opportunity.
Oh, Thomari, that means a lot. That means a lot. Okay. Thank you, guys. Smash that like button, and please consider subscribing if you got some value out of this video, and catch you in the next one.